In today's market episode with Dan and Samantha, we are breaking down the cattle markets. What have we been seeing over the past few days? The government has opened back up. Some major media news hits have happened in the markets. How has that affected everything? And what are we seeing as far as that is concerned in the commodities market, how that's affecting the live cattle market? All of those things. Dan and Samantha are breaking it down all for us today. Before we hop into today's episode, if you are watching on YouTube, if you could take a second to make sure that you are subscribed to our channel and that you like this episode. And if you're listening on any of our podcast platforms, make sure that you are following on that platform and go take a second to rate and review this episode and this podcast as well. We really appreciate it here at the team. And without further ado, let's go ahead and hear from Dan and Samantha. Dan, Samantha, welcome back to the podcast. We have quite a bit to talk about today. Dan, if you didn't know, I'm sure you didn't watch last week's episode, but Samantha and I had a blast without you. I mean, not saying we don't love having you here, but
yeah,
it was fun to be able to make fun of you and you not there to say anything about it. And you don't watch these podcast episodes either. So I told Samantha, I was like, this is just free reign for us today. Dan left us alone. Let's go crazy.
Yeah, it was a total shit-talking session.
You know, usually the celebrity you're roasting is sitting there. So, not saying I'm a celebrity. That's just how they work, though.
I mean, if the people want it, we have to listen. And if the people comment on this saying that they want a Dan roast, we will provide. We will provide. They didn't say that they wanted me to come to Iowa and you teach me how to actually cook a steak. So, apparently people agree with my air frying of steaks. So,
wow.
You air fry your steak?
Yeah, thank you, Samantha.
Never heard of that.
So I learned to do it in college because I didn't have a grill in college, and I started air frying my steaks, and they actually turn out really good, guys. Like, hate on it all you want, but they turn out really good. They're crispy on both sides. Dan, shut up. I'm going to mute you and turn off your freaking video. They turn out so good. I opened a can of worms today. I recognize that. But yes, Samantha, I do air fry my steaks. My husband grills the steaks. Like, we do grill steaks as well. But if I'm cooking the steaks, they're getting thrown in the air fryer, and they're delicious. So
nice.
Tastes like
Each
Lucky
their own,
Charms.
I guess.
Dan just hates. Dan hates everything about it. He hates the principle. He hates all of it. So yes, it's a sore spot for him. But you know, I like bringing it up to make him uncomfortable.
Caveman grilled a steak the right way to start with. Let's not try and reinvent the wheel.
You know, we'll just leave it at that. We'll leave it at that.
As long as you're eating beef, I'm here for it.
Hey, I don't disagree with that. So, Dan, you're such a hater. We can hate on you. You can't hate on us. That's how this works here. Don't you know?
Right.
Jeez. Okay. Well, what's happening with the markets, guys? What is going on in the world this week? Who wants to start us off?
I'll take the lead. Over the course of the last few months or so here, kind of seems like for every one piece of bullish news, we get twice as much bearish news to sort of counteract it. I do give our presidential administration a little credit just in recent news that he waited until after trading hours to release the 10% removal or reciprocal tariff removal on Brazilian beef. In the past, every time Trump's come out with a comment to lower beef prices in some sense or another, even just the talk of it, we've kind of seen it hit our feeder cattle and live cattle markets much harder than it impacts box beef cutout values. And ranchers kind of end up getting the short end of the stick of it. Probably would have done the same thing this time with the new tariff news had it been said during trading hours and there not been a weekend in between to kind of think about it. That timing probably saved us from another downward trend in the market to start the week. I also heard word that this tariff news was leaked, earlier last week. So maybe that's also what provoked that limit down move last Thursday. Still not really sure what fueled it, but hey, we'll take the upswing we got yesterday. I think kind of what this administration still has to understand, don't underestimate that the markets will do what they need to do when they need to based off supply and demand. You've heard it preached probably plenty of times before. Our U.S. herd, smallest it's been since the 1950s. These highs make sense. I think if the government is really to focus on anything in the industry right now, I'd rather it be that, one, we don't open the border prematurely. I think that threat of the screwworm, we just can't handle it unless there really isn't one at all. I think there's a lot of good things kind of in the USDA's plan that they most recently released, and implementing that alongside the DOJ investigation into the packers, MCOOL, beef transparency in the beef industry, all good things if the wheels are in motion. Otherwise, I think we could just do without the extra noise and leave the markets to work how they're supposed to. I think with that, we also take into account, Trump's fighting with Mexico right now about drug cartels. It's all over the media. We're going to have $10 hamburger no matter what. Take that, factor in heifer retention. Cattle on feed reports coming later this week are reported to maybe be bullish. So maybe that had a play in higher prices yesterday. But looking into the cash market here, no negotiated Fed cattle trade reported yet this week. It ranged from 225 to 227 last week. Saw some trade at 228 in the south. Late sales in the northern plains touched lows 218, 222. Sale barns were mostly lower. Late in the week, your sale barns did gain a little bit of ground. Feeder cattle were mostly steady. I think really what took the brunt of the lower prices from what I've seen is the calf market. I think there is still that concern from cash buyers surrounding whether or not prices will be, where the prices will be when it comes time to market these calves further into next year. So, like Dan said, traders like stable markets, and we're just really not seeing that type of consistency. I think at this point, keeping risk protection in mind is huge. For a while, we all wanted to ride out the highs until it crashed. And then when it did, we kind of had a hard time deciding if it was going to keep going lower or if we were going to be able to turn this thing back around. Some of us are still kind of at that point. I was relieved, like I said, to see the markets up on Monday. I hope we continue to see that in the next few years specifically, but even just within this week to support herd expansion. But I think there is that long-term bearishness still at play. There's a lot of unpredictability, clearly, in the media and our presidential administration. So just keep in mind, these are still good prices to be protecting at, especially looking further into next year.
Dan, what are your thoughts on things that have happened this week?
100% spot on, Samantha. Yeah, a lot of volatility as usual, both directions now. If you go back, rewind to last week, that big limit up move last Monday, that was lower open interest. So definition of a dead cat bounce, shorts taking profit. Then the following 2-3 days, you had lower open interest on move lower. Once again, that becomes longs taking profit. So not a healthy market. You want to see new longs come to the market. So fast forward to today, and we get yesterday's open interest report, and it shows we had a touch higher open interest. So we had new longs coming into the market yesterday, driving the market higher. So that's supportive. I want to see that. I want to see, 2,300 to 5,000 contracts a day we add in a higher market. That's very, very constructive. If we see that, we start trending towards that second gap on feeder cattle up at 339, 340. I want to see us actually not just attempt to fill it, but I'd like to see us get into it and actually fill that gap and move towards that third gap. That the next gap up there at 355, 356 is going to be a struggle. So we got to keep our eye on the prize and look for that first big gap, no doubt, right away. But there's a chance if you can bring the buyers back into this market, get everybody calmed down. That being said, equities suck. It doesn't. You don't have to be a stockbroker or an expert trading S&Ps or Dows to jump on social media and see delinquencies, repos, all this stuff, all this bearish news as far as our economy is concerned. And, one side blaming it on the tariffs, the other side blaming it on a past administration. And frankly, doesn't really matter to me. It's fix the problem, right? So I believe not this past weekend, but the weekend before, Trump was talking about sending out some stimulus money. If that happens, that's historically been bullish commodities. So if he does go through with that, I think we could see a bounce in the cattle market, could see a bounce, basically all across the board in commodities, and probably see equity stabilize for at least a brief spell. It concerns me that we're already considering that. We're printing more money. Printing money is what got us in the problem we're currently in, and all of a sudden we're right back to doing it again. What does that do long term? So, like I said, I'm not going to pretend to be an expert, but you get on social media, you watch the news, a lot of uncertainty as far as people's finances going into the holidays. Historically, November's not a great month for equities, so hopefully you get that Santa Claus bounce. And yeah, just back to beef though. Right now, your rib, your loin, those are what's actually holding up this cutout at these 370 numbers. There for a while it was the chuck, but we don't have anything to talk about demand being super, super strong until we get all the way to next March. So don't want to beat that dead horse, but once we get past the next 3 weeks and lose that Christmas buying on that midsection, I'm not really optimistic for January, February. If the economy's struggling now, let's add some Christmas credit cards onto it, and we really have something negative to talk about. But we're choosing to be in a good mood today, and open interest was higher, so let's go with that.
I love the positivity. We are choosing to be in a good mood today, damn it, because there is something good to talk about. What are our thoughts on the government opening back up, and we're going to start getting our cattle on feed reports back? We're going to start getting all of these reports again from a national basis. What are your guys' thoughts on that, and then the initial cattle on feed report too?
Well, if you look at the grain report last Friday, I'd say we should have left the government closed.
I knew you were going to say that.
What a waste of taxpayer dollars. They come out, they barely lower the yield, I think, 0.6 or 0.8 of a bushel. And then they come out afterwards, after the market flash crashes, and say, oh, we may have not had all the data inputted correctly. It's like, okay, glad you're not my doctor. So inevitably, here we are. We're waiting on data that might not be accurate. We don't have a true sense of, we have the estimates from the last several months, but, all this data they're going to start dumping on us is skewed because you don't have the prior data. So there's no baseline to go off of. At the end of the day, I've always been a guy, let the market do what the market is designed and supposed to do and decide the price. Now all of a sudden you've got these reports back and we're right back to the old great US of A. But once again, we're choosing to be in a good mood. So we're going to talk about it.
Dan, John isn't going to be on the podcast this week. So us bringing all of this positivity is going to be this is going to be such a high week for everyone listening to these market things, because I love John's episodes, but he comes on and he's like, everything is shit. Let's talk about it.
Well, I didn't figure you wanted both of us doing that, so that's why I mean, I could come on and tell you how I really feel, but Grandma's not going to be the best watching this.
Hey, I wouldn't put too much on it. John always says that his most loyal listeners are grandmas in nursing homes and retired truckers, so they might love it. Who knows?
No, he's good and he's spot on. I like that guy.
Geez.
Very good at proving the point.
Yes. Samantha, what are your thoughts on the cattle on feed report?
I think with that coming out on Friday, we obviously can't just get more cattle out of thin air. So I don't think placements are going to be any higher than we've seen them on the last report. We've got feed yards down in Texas growing weeds. So I think the cattle on feed report's going to be pretty bullish. Now, could that change as we move into the first of the year? Sure, especially as we start looking at opening that southern border. But like I said, the numbers are still minor. So what we're looking at from the south right now, I've heard 250,000 head. Like I said last week, we killed that in 2 days. So I think it'll be pretty bullish for the most part.
Yeah, definitely. I am very curious to see how it continues to impact the market. And Dan, I kind of have the same sentiment as you of we're not going to hear anything new. And we saw the grain one last week and they're like, oh, oops, we released it and didn't have all the information. And sorry that we affected the markets and made all of you guys run around with your tail between your legs. Thanks. Appreciate that, guys. Great swing back into regular operations and opening back up. We really appreciate that. But the markets have been extremely volatile, and we have been seeing a lot of that media push and that consumer push just impacting our markets right now. beef prices in the grocery store are high, but our consumers are mostly worried about that hamburger price. And I think that we have to be realistic of the fact that, like, we got to start figuring out a plan for that. We need heifer retention. We need to start rebuilding the American herd, but that's not going to see impacts for 2 years. And so what do we need to be doing in the meantime to help supplement that and also not let it affect the American market too much at the same time? Because we don't want to become too dependent on foreign demand or all of those other things going into it as well. But it's just absolutely wild. We've talked about it week after week about how much the media and how much just consumer chit chat is impacting our markets right now, both on the board and just in the sale barns as well.
And they keep doing it. I mean, just when we kind of think that the media, specifically our presidential administration, understands the play that he has, and he has got it figured out to say these things after trading hours, and I appreciate that. But it just has so much of a play, and they keep doing it. So it's like, again, one step forward, two step back sort of mentality.
Absolutely. Absolutely. Any other thoughts on the markets or anything else we need to hit on this week, guys?
I will say, as we are approaching the end of the month here, this PRF, pasture range and forage protection insurance, rain insurance, whatever you want to call it, is coming up on the deadline December 1. So if that's something you want to get your foot in on, definitely don't be waiting any longer. It's good stuff.
Yeah, definitely don't wait until you need it type of situation. Dan, any other closing remarks or comments? Anything else that we need to hit on within the market this week?
If you need feed, get a bot. Of course,
There you go.
in my opinion, if compliance is listening, yeah, that's my opinion. My opinion only. So get your feed bought. I don't know about you guys, but it feels like winter's going to come early and it's going to be hard. So we'll leave that up to Lauren's weather expert coming on, but get your feed bought. You might need it.
Yeah, definitely. From some of the early reports that we've been seeing, we have been blessed in the Midwest recently with some abnormally warm weather. And everyone is saying enjoy it while you can because it's going to be a long winter from what we are seeing. And hopefully not too dry of a winter, but who knows? Who knows? So, yes, I agree with Dan on that. Thank you both for your thoughts, comments, and insight today. It is much appreciated. To all of our listeners out there, make sure you check out the show notes down below. If you are interested in talking about LRPs, talking about that pasture insurance, that rain insurance that Samantha was talking about, check out our show notes down below. You can get in contact with our team to discuss your options and what kind of works for you and your operation. Everyone's operation, everyone's ranch is different, so it's always best to just get in contact with our team and they can kind of break down exactly what will work for you and your operation as we go into these winter months and these extremely volatile markets that we have been seeing. Dan and Samantha, thank you for your time. And to all of you listeners, we will see you all next time on another episode of the Cattle USA Daily Podcast. Have a good one, y'all.